In this video, you're going to learn exactly how I've taken an account from $1,000 to $2,000 in 14 days. I didn't do it with complicated strategies. I didn't do it by taking 100 trades. I didn't do it by using a ton of indicators. And I didn't spend all day chasing altcoins. In fact, I've been constantly sharing the exact analysis and strategies that I've been using to make this money, and every single trade, including a new one today, has been shared. That averages to over $100 of profit a day on a $1,000 account, but it's not just me doing it. Other zero complexity traders, my students, are doing the exact same thing. Thomas has made 270% in the last 3 months. Spicy, one of our coaches, has done over 50% in 1 month. This isn't theory, this is real trading that me, and more importantly, my students use to make money in the markets, and I want to share it with you today. I've been trading crypto for the last 6 years now. I've done really well in the markets myself, and I teach other people to do the same. If you like level-headed trading analysis without the complexity that makes you money, you're in the right place. So subscribe for more videos like this. If you're going to use the strategies I share, you'll just need a couple things. Firstly, make sure to keep trading and investing separate. They're completely different activities. Only put on the trading exchange what you need to trade. Secondly, most of the strategies I share use leverage, and these are high-risk strategies. That's required to grow small accounts quickly, which brings upon risk of ruin. This is deliberate because I want to grow it quickly, and once it gets to a significant size relative to my portfolio, I will drastically reduce my risk. For my leverage trading, I use Femex. It offers up to 100x, but I'll rarely use more than 10x. And thirdly, this is not financial advice. I'm a guy making YouTube videos with anime posters in my background and a plastic dinosaur. If you guys follow me on Twitter, you will have seen I did a full analysis on Bitcoin, where I showed exactly what I was looking for, and that was either a breakout above the Wagyu level or a breakdown below the ramen level. So really easy, simple trading. So this right here was what we were originally looking at. Now, funny comments aside, pay attention. We've got multiple data points here confirming this level. We don't take into account this because it was a clear deviation above and then came straight back down. This gives us a range between 25K and 23.9K. This maintains the breakout level at just above 25K. We're not using 25K anymore because we've had a few too many levels go above it. You can see I'm in a trade right now above the Wagyu level, catching the breakout right after the first candle, and we're about $500 in profit. Now, to understand how I determine these two levels as the key breakout levels, you can see like before this, price wasn't doing much. As the second it hits these levels, it explodes up. You need to do less better, not more with trading. There aren't 100 different indicators. There's just really polished, clean levels that I know exactly how to trade. And that's how with just 4 trades, this account has gone from $1,000 to $2,000. And I've been sharing the trades on the channel and the strategies. So pay attention. The first thing you do is you go look at the high time frame chart. So if we go to the weekly, that's the high time frame chart. You can see market structure looks like this. Let's remove everything and look at the chart cleanly. The first thing you want to do is determine trend and market structure. Trend is really, really easy. You just click on free moving averages and you see what direction they're going in. If they're all fanning up, it's an uptrend. If they're going sideways, it's a neutral trend. If they're going down, it's a downtrend. That's the basics. Let's get rid of that. And now we're going to look at market structure. Market structure is determined by a series of highs and lows. Here's an example. So take a look at this downtrend right here. Here's a high. Here's the next high. This one is lower than that high. Same here. Next high, lower than that high. Same here. This high is lower than that high there. Same with the lows. This low here is lower than this low there. This is what happens in a downtrend. There's one more high here actually that I'm going to add. Now, what has recently happened? Well, firstly, you see this weakening. Big moves here get replaced by small moves here. These two small moves are often the first sign that reversal is about to come. Again, no rocket science. I remove the complexity from trading. So the next thing we're going to do is look at key structural levels. If the structure is determined by this, at what levels is the structure going to shift? At what levels will these highs start changing shape? Well, if we take out this high here, and if we take out this high there, these two levels become key structural shifts. The first shift we had was over here at 20K, also a key psychological level. The next shift we had was over here at 24K. I wasn't really trading much during this period here. I caught this move down, didn't make much money on it because it didn't go very far down. And then as soon as I saw this structural shift over here, that's when money printing started to happen because I spotted the structural shift, and that is how I know when to trade. That is why with just 4 trades trades, 3 wins, 1 loss, we've managed to take this account from $1,000 to $2,000. And I plan to take it a lot higher because I know exactly how to trade these conditions. Now pay attention to this weekly close here. If the price closes above this 25K level, we have seen a huge structural shift and we are no longer in a full downtrend. In fact, we've gone to neutral. Now I'm going to break down the strategy, how I entered my current trade and how I plan to exit it and what I'm looking for next in the market. It's not easy, but it's possible for everyone to make a consistent income from trading. And what's better is the strategies I'm sharing, this is trading Bitcoin and Ethereum. That means you can use it on a $1,000 portfolio, $10,000 or even a $100,000 portfolio. It scales and there's so much potential. Now, you're welcome to figure all this out on your own, but if you've been struggling for a while and could use some access to experts, a clear roadmap to follow to get you to profitable trading, don't be afraid to ask for help. The zero complexity servers are open and we even offer private mentorships as well, so check out the link in the description below. Right, so how did we catch this trend? First thing we did was, as I showed on the higher time frame, we saw that we had a structural shift here, a bigger structural shift at around the 20K level, and now this is a huge structural shift and we're lucky to be positioned in a very nice long for it. So we know that we're looking for structural shifts to the upside. That means we can zoom into the 1 hour and let's go back in time and bring back the Wagyu ramen levels. So here we're looking for 2 separate plays. Firstly, we're looking for a breakout to the upside or we're looking for a breakdown to the downside. Upside is much nicer. Why is that? And this is important. Again, you need to know when to trade. With the downside, we stand to make about 4.99% profit, and we're trading against both the short-term trend here and the big structural shifts we're seeing towards the upside. However, playing to the upside, we've only got one really weak resistance here at local highs, which is about 26K. And then the next areas of resistance will be about 28K up to 30K. It's been so long since the price has been there, we just have to see how they react to it. So we've got a potential 10% gain there, which is already double the previous one, and we've got potential for an 18.2% gain here. This makes setting up trades really easy. So let's move forward. You can see price is getting close to breaking out. And normally I use some indicators and I teach people how to do them to enter these positions, but you can just use 1 hour candle close. We've got this big candle close up there. Now we're going to enter a long position. Where's this long position invalidated? Well, let's take the bottom of this move here, and then we can target 28K. But that's not it. We also need to think about trade management. And the first area I expect to see some resistance is here at 26.5K. So at this area, we're still looking at 1.34R, which isn't great, but even in our first resistance area, we look pretty good and we'd be in decent profit and the risk reward ratio is in our favor. I love seeing this. So not only do we have a first resistance that leaves us in decent profit, we've got another target here up at 9.32% and a final target that gives us an outrageous risk to reward ratio of 6.43, and this isn't unrealistic. When you see big trend shifts like this, you can ride huge moves up. They don't happen often, but you only need a few of these to make good money. This is how I've doubled an account with 4 trades in 2 weeks. So we get the breakout level here. We enter the position, and bringing us up to present day, we're exactly where we expected to be at the first resistance that we've actually managed to get above. So this looks like a really comfortable position right now. I have no interest in closing these longs. The only time I will reconsider to the downside is if we do not bounce off of this 26K level and we start floating around this area here. Until then, this looks like a fantastic position and I do expect it to continue running. Weekends can be a little bit shaky where you could see sideways action, maybe a few wicks coming down, but don't get scared out of your position. Stick to your system. I know my system sees no signs that this is going to stop, and I have no emotional attachment to unrealized profit here. This is a really important trading tip. Don't think about how much money you're making. Our goal is not to make money on one trade. Our goal is to take good trades consistently. Now, there's a subtle but very important difference there. When you obsess over one trade, you might be able to save yourself some money one time or make a bit more money another time. But that's not your goal here. We're not trying to make a trade. We're trying to become traders. And traders make money over a consistent series of trades. You're never going to win every single one. The only thing you can do is build your system and stick to it. There are key elements to your system: your risk to reward ratios, your win rate percentages, your expectancy, your risk of ruin. You get all of these together, you make sure you've got a good system, and you make money consistently long term. That's everything from me. I hope this video was helpful.